it's kind of a personal thing. And what I mean by that is that every individual and probably every business entity out there has a different inflation rate because we don't all buy the market basket of goods that's used to compute inflation. And so prices go up for some things, and it impacts one consumer or one business, but it has no impact on another. This is why the Fed really tries to bring down the overall inflation rate down to some lower level. But it's been elevated in recent years, and it's at about 2.6% currently. The Fed's preferred inflation target there, of course, is 2%. And it's still an issue. When we asked community bankers about that, they said that deposit costs was most impacted by inflation. Although the share of respondents that cited the concern fell from 59% last year to 46% this year. The second most impacted by inflation was personnel expenses, and 23% of the respondents said that. And then operating expenses outside of personnel was also impacted. 19% of respondents said that, and that was up from 8% last year. Even with all that, though, there's 75% or so of the respondents say that it's manageable. The inflation environment right now is something that they can manage, but it does impact them.